Hello guys, and welcome to our first YouTube video.
In this video, we're going to be talking over a few trades that we took this week. I'm going to start off by talking about Great British Pound USD, and then Ryan's going to follow up after by talking about Euro USD.
So let's get into it.
Okay, guys, so starting off with Great British Pound USD, what can I see in the market? To start with, I can see this key level across here at around 1.28 in the market. As you can see, the price is rejecting it with these wicks, using it as support here. And then previously, we've had this massive impulse to the downside through the support level. And then over previously since around the end of March, we've just been correcting back to this level. And as you can see, we have come to retest this level in the market and use it as resistance. The market likes to move in impulses, corrections, and then followed by an impulse. So I do believe this market has made its impulse to the downside. And now we've made the corrective back up to retest it. And then we are going to just see a big continuation to the downside in the long term. But obviously we're looking at our entries on the smaller time frames. So just looking at how price retested to begin with on the daily chart, we can see the slowdown in momentum as we come to retest 1.28. We can see the small candles, we can see the wicks flying about. So we can begin to see the indecision in the market and the loss in momentum, where there's not really many players in the market. Buyers and sellers are taking their profits, getting out of the market. So there's not much really going on around this level. That's why we know it's key. And then what was our actual shift in momentum? What actually gave us our bias? Well, it was this engulfing candle on the daily, which completely engulfed the indecision in the market, completely engulfed to the downside. So that's when we can actually start beginning to look for our bias, look for our sell bias, and start looking for selling positions. So jumping down to the 4 hour. Well, ever since this retest, we have just been making bearish market structure. As you can see, we made our first lower low, followed by our lower high, and then our lower low again and our lower high. So we have just been making bearish market structure. We've also, if we can use the Elliott wave tool, we can see 1, 2, 3, 4, and that 4 is when we can begin to predict that we're going to be making the 5th and final impulse wave to the downside, and that's where we actually started to look for our sell positions on that. So as you can see, after our first impulse away from this key level of 1.28, this is a key level in the market. As you can see, we've also had another rejection previously at this level. So we can start to see that this is actually a key level, and we can mark this in as a key level using our zones. And we can see the significance because when we actually came down here to make our lower high, we can see it marks up perfectly with this zone in the market. So jumping now onto the 1 hour to look at our entries, because although we did come back to retest this level in the market, we did actually form bullish 1 hour market structure. So in order to actually take sell positions, we need this to be broken. So let me show you what this looks like on the 1 hour chart. Yeah, so just because we've come back to retest this level does not mean we should be taking sells right away at this level, because price could easily just continue making this bullish structure and continue up to the upside. So we needed this some sort of bearish momentum shift around this level, because as you can see, if I just mark in all these higher lows in the market, we are making bullish structure towards this key zone that I've got marked in yellow here. So we needed at least this level to be broken, our last higher low in the market. And where did we begin to see our shift in momentum? Well, it was this triple top at the top. So we can see this rejection, this rejection, this rejection with our wicks. We can see this, and then we finally had our impulse to the downside. And then after this impulse to the downside, we can begin to look for our entries. In terms of a pullback and a retest of a significant level. And what that level was, well, we can see, as you can see, I've highlighted this higher low, and it actually marks in well with this level in the market, this rejection here too. So this is the key level we was looking at. As you can see, we've had rejections here and wick rejections here. And then obviously price came back to retest it. As you can see, we've had huge wick rejections across the market here. So how did we retest? Oh, and it's also key to understand that the Fibonacci retracement at this level was at an important level of 0.382, which shows that this is actually a strong trend in market. So that just adds to the confluences of this trade. As well as it being this zone, we can actually say it's actually marked up with a key Fibonacci level. So looking at the candlestick patterns around this level to look for our key entries, well, we can see we formed this pin bar where we rejected the upside, buyers failed to push the market higher, and sellers just used the momentum and drive the market down. So we didn't enter right off that. That was just our first rejection, our first sign of our momentum shift. Afterwards, we had 2 indecision candles. So there's no momentum in the market. There's indecision. Neither buyers or sellers are in control at this moment in time. So we don't want to be buying or selling. We don't want to be doing anything at this moment in time because there's indecision in the market. Anything can happen at this point. We have to wait. We have to wait for extra confirmation. And by doing so, we waited for this candle, this bearish engulfing candle, which I'll highlight. This one here. We waited for this one, and that was our signal to get in a trade. That was our signal that there is bearish momentum in the market and sellers are taking control at this key level in the market. So we entered at this level with our stop loss just above this level in the market, and we took this trade on a Thursday. How was it moving throughout Thursday? Well, we was moving quite sideways in the market. But there was no reason to get out of the trade early. We just used it because this is just looking like it's sort of a mini corrective phase to then further impulse to the downside, which it did. So where did we actually get out? We got out at around 2% in the market, a little bit less, because if we look this level in the market, we can see we began to stall, we began to slow down in the market. If I look at the 4-hour, we can see we formed this huge wick to the downside. So being a Friday, because we don't hold our trades over the weekend, we want to close in as much profit as we can on a Friday. So we actually ended up getting out at 1 to 2, around 2%, which was a good close to this trade. And yeah, that's Great British Pound USD. And now Ryan will run through Euro USD.
Hello guys, yeah, so this is me running through EURUSD. Starting on the daily chart, we're just trying to look for key levels in the market. This is what we always start with, find your key levels and then trade off that. So I can see we had our key level down at here at 1.0785. I can see we made a triple bottom across here. We had a key level at 1.1 and 1.12. So scaling in, bit of history, just looking at the overview of the trade. We can see we were ranging in this market for a period of time, I think from the start of April to the end of May. So we were ranging in between here. We also made a triple bottom on the bottom here, and then we started our first impulse, first bullish move to the upside. Looking at this key level here, 1.12, we actually broke into the upside, and now we was looking for the retest, the pullback to the down, to retest at 1.12 to then look for more bullish confirmation. Key thing to highlight here, 22nd of June, we actually had a bullish engulfing candle engulfing the previous candle. So looking at that, we can then confirm our buy bias and start to scaling in on the 4-hour and 1-hour and try to find these key levels to enter. So 4-hour, a bit of history as well. Always good to use this type of tool in. We've got the Elliott wave theory where we had our 1, 2, 3, 4, 5. We had our 5-wave push. As you can see, the 3rd wave being the biggest. So this is confirmation that Elliott wave theory is correct and it is working. So normally after Elliott wave theory, breaking our key level of 1.12, we then look for the corrector structure back to retest. And what did we form? We formed a lovely A, B, C pattern. So yeah, so that was great. We came back, retested the one level 1.12, but many traders would have been scared at this moment as we have broken below. We have broken below, but this was just a false breakout. This was just a false breakout to trap a few sellers. If you want to jump the gun a bit early in the market, you might have sold around here and you would have got stung and you would have hit your stop loss. So that's always be careful around that because you don't want to enter the market just on the breakout. You want to wait for the retest and then try look for entry. So that's the 4-hour. Not much going on here on the 4-hour apart from just waiting for the retest of structure, a bit more zoomed in. We did form a evening star around here. No, sorry, morning star around here. And now we're looking for the bullish continuation up. So jumping on a 1-hour, what do we have? We had a descending channel. And then normally in a descending channel, it's just a corrective phase to push down to then just gain. Basically, it's just a descending channel to come down to then come back up. So as you can see, we had a descending channel coming back here to retest our 1.12, and then we actually did break above it with a big bullish engulfing candle here, which confirmed that the break of corrective structure was confirmed. Now look at key levels around here on the 1 hour, just to try to pinpoint a perfect entry. We can see a level in the market across here that we highlighted. So this level across here, we can see where price has been rejecting throughout the whole period of this sideways moving market. So after we had the ABC complete, the break of this in channel, we can start to look for bullish, a bullish entry. Now, the key thing that I spotted here was this pin bar on the 1 hour. As you can see, we had a big spike to the downside, which rejected the 50 EMA. But this was just to gain orders for another bullish continuation, because you see this a lot. This is just a spike just to gain orders, gain buy positions to then push the market back up just to get a better position. But as you can see, it actually works very nicely with the 50 EMA, which was respected with a touch here, and a touch here, and then breaking above. So our entry was actually on this candle here. As you can see, with this spike, we didn't really want to enter on this bullish engulfing candle because our stop loss would have been huge. And it's all about risk to reward. It's all about being realistic with your stop losses and profits. So take profits. Sorry. So that entry there wasn't perfect because our stop loss would have been here. So we wait for another retest of here. Wait, confirm for that triple bottom, that 1, 2, 3 triple bottom, and then we actually entered on this bullish engulfing candle here. Entry there, stop loss was 20 pips. Just and safe enough, just below this low as well. Just safe enough that if we do pull back a bit, we just a bit saved. It was most people would put a stop loss down here, but like I said, the risk reward wasn't okay. We was more than happy with this because we had that triple bottom confirmation and that bullish engulfing. Now take profit targets at B. As you can see, we had a clean level across here. Not being too greedy with our targets, trying to aim for the next key level in the market, which was at B. Some people might have been a bit greedy and tried to aim for 5 up here, and you can see the market reversed, and you wouldn't have had your profits. You would have got a lot of a loss instead of more of a profit. So we actually made a 1 to 3 on this trade, which was here. This is what we normally do. Just aim for 1 to 3, get in and out of the market as soon as possible. The longer in the market, the more chance of you actually losing money. So less is more. And yeah, that was it. So entered on this bullish engulfing, stop loss just below structure. And then as you can see, price made a big bullish engulfing from here and just continued up ever since, and then hit our take profit at 1 to 3. And that was it for EU. That was good.
Yeah,
Wasn't it?
that was a beautiful trade. That was a beautiful trade.
It was. It's just clear market structure, break a corrective structure, come back, retest, enter on the bullish engulfing, and that was it. But yeah, it's not just you see a lot of traders just trading off like support and resistance, but it's a lot more history behind it. It's the history of the Elliott wave theory being complete, the retest of the key level at 1.2, and then scaling in on the 1 hour to find these key hidden levels that you can enter off. And yeah, boom, that was EURUSD.